Good day. So for this PowerPoint presentation, we are about to discuss share rights and share warrants. Our first topic is share rights or stock rights. So these share rights are rights being issued to existing shareholders, entitling them to maintain a proportionate interest in the ownership of the corporation when new shares are to be issued. Thus, the issue of new shares is offered first to existing shareholders, proportionate to shareholders' previous holdings, before it is offered to other interested investors. Okay, so ito yung tinatawag natin na preemptive rights. So itong preemptive rights na to, okay, prevents the dilution of voting rights without the consent of the existing shareholders. Generally, the stock or share rights gives the holders thereof the privilege to purchase shares at a price lower than the prevailing market rate of the stock. Okay, so technically, itong shares na to is given to the existing shareholders already. Okay, so let's proceed on the accounting of this one. So upon the issuance of these share rights, so the issuing corporation records the transaction by only using a memorandum entry. So in the memorandum entry, we will know there the listing of additional number of shares that may be acquired through the exercise. Okay, pag sinabi natin exercise, gagamitin ng isang shareholder yung binigay natin na share rights. So ngayon, upon the exercise of share rights, the transaction is recorded as an ordinary issuance of share capital. So before in our shareholders equities discussion, so nagkaroon tayo ng issuance there. So it's just a normal issuance, no? We debit cash, then we credit ordinary share capital, and we credit share premium for the excess. Okay, and then upon expiration, we will only record it at memorandum entry. Thus, a share right will only affect the stockholders' equity, okay, upon the exercise. To give you an example about share rights, so we have on April 19, 2020, Ceres Choice has 100,000 shares of 120 par value ordinary share capital and decided to issue additional 20,000 shares. It issued one right for every share, okay, giving the holder the right to purchase one ordinary share for every 5 rights, okay, at 130 per share. The rights expires on June 30, 2020. So, this company has 100,000 shares outstanding already. Kaya at ang sabi, one right per share. So, ibig sabihin, we have given around 100,000 rights, no? Na kung saan, if you're going to purchase a share, you need to surrender that 5 rights. So meaning, out of the 100,000 rights na pinamigay, 20,000 shares can be purchased at 130 per share. Okay? So we will have various scenarios using this problem. Okay? So the first scenario in this slide, okay, if all the rights were exercised on June 15, 2020. Okay, so unahin natin. So at the date of the issuance of rights on April 19, 2020, we will have only a memorandum entry as mentioned a while ago in the theoretical discussion. So, we have the memorandum entry. So, this is only a pro forma, ha? So, pwede nyo palitan yung mga wordings. So, issued 100,000 share rights to the shareholders, permitting them to purchase one share of 120 par value ordinary share at 130 for every 5 rights submitted. Okay? And since in this scenario, okay, we will assume that all of the rights were exercised. So, ang entry natin upon exercise would be we debit cash, okay, at 2,600,000. So, remember, nabanggit ko kanina that we are given, okay, the shareholders are given 20,000, total of 20,000 shares, no, coming from that particular 100,000 rights, no? So 20,000 shares since na-exercise naman lahat times 130, which is the exercise price. Okay, so 2,600,000. Then we credit ordinary share capital, 20,000 shares times 120 na par value, okay, 2,400,000. And lastly, we have the ordinary share premium, which is the excess of 200,000. So wala na tayong other entry because all of the share rights were exercised on June 15. So that's with this scenario. Using the same detail with series choice, however, we have second scenario. What if out of the 100,000 rights na pinamigay, 80,000 rights were only exercised in June 15 and the remaining 20,000 rights had expired? Okay, so on April 19, again for the issuance of the rights, we will just record it at a memorandum entry. Okay, so same lang last time doon sa scenario 1. Okay, in June 15, 2020, since ang na-exercise na rights is 80,000, and if we're going to convert it into shares, 80,000 divided by 5, so the shareholders have only exercised the rights to purchase 16,000 shares. So, ang changes sa entry natin would be debit tayo ng cash, 16,000 times the purchase price na 130, so 2,080,000. Then we credit ordinary share capital at 16,000 shares times 120, so 1,920,000. Then we credit ordinary share premium for the excess of 160,000. So again, that's the entry for the exercise of the rights. Now, as stated in the scenario, nag-expire yung ibang rights. So, for the expiration, as mentioned in the theoretical discussion, then it is also a memorandum entry lang. Okay, so our memorandum entry for the expiration is 20,000 of the 100,000 share rights issued to shareholders have expired. Okay, so this shows us that share rights are used to purchase additional shares, okay, which were given, okay, these rights were given to the existing shareholders. And lastly, no, share rights would totally affect lang the shareholders' equity upon exercise. So the next part of this presentation is all about share warrants. Okay, so a share warrant are sold by corporation for cash in conjunction with the issue of another security, usually for preference share and bonds and or bonds. Okay, so itong share warrants na to, okay, hindi siya kagaya ng share rights na binibigay lang for the existing shareholders. So as mentioned in the definition, no, it could be given, okay, in exchange of some consideration for preference share as well as bonds. So yung bonds discussion natin during the financial liabilities, no, mauulit siya ngayon, okay, about the at detachable or non-detachable warrants, no. Okay, so these warrants, if exercised, will give that particular holder, no, an ability to purchase 8 shares of stock. Okay, so the first source of our warrant would be preference shares. So what will happen if we issue preference shares with these warrants? Again, the characteristic of a warrant is that it is given for those who are non-stockholders yet, okay, so that they could be able to purchase shares of stock from the company. So with the preference shares being issued with warrants, so what will happen is the issue price of the preference share with warrants attached is allocated to both preference shares and warrants based on their relative fair values. So what will happen here, or market value, no? What will happen is that para tayong nagko-compute nung kagaya doon sa particular na bonds natin last time, pero doon talking about preference share dito, no? So, a preference share would be issued at one share price. Okay, at one price. Then, yung price na yon i-allocate natin, okay, using the fair values, no? Okay, so that magkakaroon tayo ng assigned value for the preference at saka para doon sa warrants. Now, this warrants, unlike with the share rights, has already an entry, no, upon its creation. Unlike doon sa share rights na wala tayong particular entry, memorandum lang. Diba? Okay? So, the second bullet states that if the warrants are exercised, so dito na we're talking about accounting for the exercise. No, the value assigned to the ordinary share is the value allocated to the warrant plus the cash proceeds from the issuance of ordinary shares. So, pag bumili na ang isang holder ng share warrant ng shares, so again, it's talking about now ano yung entry kapag na bumili na sila. Okay? So, mamaya papakita natin yun doon sa examples natin, okay? And what if nag-expire naman yung warrant? Then what will happen is, of course, dahil sa first bullet, meron ng assigned value para sa warrant at hindi na-exercise, then it will just be transferred now to the additional paid-in capital. So those are the important theory concepts that you need to understand so that you can proceed with the examples. Any question? So let's use this example. Okay, so Captain Re Corporation issued 1,000 preference share of 100 par value at 130 per share. Each preference share includes one detachable warrants that entitles the holder to buy 120 par value ordinary share at 30 pesos. At the time, the market value of each preference share without the warrants attached is 120 and the market value per warrant is 10 peso. So each ordinary share sells at 25. So remember kanina, upon the issuance of the preference share with warrants, we need to allocate the value to the preference as well as to our share warrants. So meron na tayo relative fair value dito. So we have the 120 fair value or market value for the preference share without warrant at saka market value per warrant. So 10. So pag in-add mo yun, that's a total of the 130. Okay, so 120 para sa preference, then 10 para sa warrants. Okay, so upon the sale of preference share with warrants, ang entrada natin would be debit cash amounting to 1,000 shares times 130 pesos. So since that's the issuance price, okay, which is 130,000, then we credit preference share capital at par value. So that's 1,000 shares times 100. Okay, so 100,000. Then we have the preference share premium, okay, 1,000 times, okay, the excess. Now, hindi 30 yung excess niya. Bakit? Kasi yung value lang talaga ng buong preference share is 120, okay, without the warrant. So thus, ang excess lang natin from the 120 is 20 pesos. So that will be the amount to be allocated lang for the preference share premium, kaya 20,000 lang yung chargeable doon. Now, para naman dun sa share warrants, we will be using the title share warrants outstanding, okay? So which is coming from the fair value or market value na 10 pesos. Okay? So kaya 10,000. So meron tayong entry ngayon for the warrants. Unlike kanina ulit na mention sa share rights na memorandum entry lang po tayo. Dito meron na tayong allocated value. Now, in this particular example, no, what if na-exercise yung warrants? Okay? Na-exercise lahat. Ano bang sabi sa problem? For each of this preference share, it will have one ability to buy one ordinary share. So we will have also, we can also exercise 1,000 ordinary share na mabibili natin. Okay, so pag na-exercise na, so debit cash, okay, we have 1,000 warrants times 1, so 1,000 shares yon times, okay, 30 pesos, which is the exercise price naman ng ordinary share at that time, no? So that would be 30,000, okay, and then we debit the share warrants outstanding 10,000, okay, which is nanggaling doon sa first entry kanina. Then we credit the ordinary share capital at 20 pesos, no? 20 pesos times 1,000, so 20,000, and credit the ordinary share premium at 20,000. Now, bakit po hindi natin ginamit yung each ordinary share sells at 25 pesos na given sa problem? It's because what is stated on the warrants once it is exercised is to pay the ordinary share at 30 pesos. Okay, so kung wala sana yung amount na yon, then we can use the 25 pesos. Pero priority natin kung ano yung stated regarding that particular warrants. Okay? Any question? So another example, actually same lang siya with the previous example, no? However, okay, what happened here is nag-expire yung warrant, okay? So I will not read this anymore. So the same problem kanina, no? And the given values, and also the entry is also the same, no? As you can see, no? Debit cash on 30,000, credit preference share capital at 100,000, credit the premium which is the excess of 20 pesos only at amounting to 20,000 at saka share warrants outstanding 10,000. In the theoretical discussion a while ago, if the warrants expired, so what will happen is we just simply transfer the share warrant value to additional paid-in capital. So I will use this entry. So debit share warrant outstanding 10,000 and credit tayo ng share premium from expired warrants. So pwede rin po paid-in capital from expired warrants 10,000. Okay? So, yun yung entry upon expiration. Now, if you're wondering, itong account title na share warrants outstanding, saan po ba siya ipipresent if ever na nag-a-appear siya sa ating statement of financial position? So, itong share warrants outstanding na to is actually a shareholders equity account as well, no? Under the additional paid-in capital. Okay, so premium din pala siya. Iba lang yung title natin, no? So, kaya ang nangyayari ngayon dito sa expiration entry, no? Kapag nag-expire, parang naglipat lang tayo ng title. So, it does not, okay, make any changes in the total stockholders equity. So, tatandaan mo ha, kapag nag-exercise ng warrants, ang mangyayari, there would be an increase as well on our shareholders equity, pero you need to pay cash. Pero pag nag-expire, no, there would just simply a transfer from one paid-in capital account, which is the share warrants outstanding, going to another paid-in capital for the expiration. Okay? Question? So in the introduction about the warrants a while ago, we have mentioned that the sources would be either preference share or bonds. So now let's again discuss, okay, about bonds with warrants. So although it was already been discussed in the financial liability part, no, ulitin lang natin siya for recall, no. Now, this particular bonds with warrants gives the holder of the bonds the ability to purchase a stock coming from the issuing corporation. Okay? So, what will happen is that when warrants are included in the issue of the bonds, the market price of the bonds without warrants attached is first determined, and the remainder of the issue price over the bond price is allocated to the warrants. So, kung naalala ninyo yung discussion about bonds previously, no, what will happen is mag-allocate din tayo. Just like preference share, we allocate. Pero, yung allocation natin dito sa bonds could either be, no, given na yung fair value or market values ng without warrants, okay? Or kailangan nating computin. Okay, kung naalala po ninyo, we need to get the present value, okay, so that we can arrive to the value allocated to the bonds without the warrant. So technically, madali lang din siya, no, in terms of computation in allocation. Now, if the warrants are exercised, the value assigned to the share is also the value allocated to the warrants plus the cash proceeds from the issuance of ordinary shares. So wala siyang pinagkaiba doon sa preference share kanina na kapag nag-exercise, so bumili ng share ngayon yung isang bondholder natin, okay, so it will pay the amount na napag-agrihan for the purchase plus of course in our debit part in the entry it would also include yung share warrants outstanding, no, and also if warrants are expired. So, sir, kailan ba nag-expire ng warrants? Either the entity, no, sets the time or kapag yung bonds natin na may warrants ay na fully paid na, then that's the time we're in. Wala nang chance si bondholder na mag-purchase nun. Okay? So, if expired, the allocated or assigned value for the warrants is transferred to additional paid-in capital appropriately described. Now, again, kagaya nung kanina sa discussion ng preference share with warrants kapag nag-expire, okay, so we will just simply transfer it to another paid-in capital account. So to give you an example about issuance of bonds with warrants, so we have Tomato Cultivator Incorporated issued 5-year 1 million 10% bond at 109. So kung naalala pa ninyo yung bond, this 109 is a quotation. Interest is payable annually. Each 1,000 bond includes one detachable warrant. So kung 1,000 peso bond is equal to one detachable warrant, so for the total of 1 million, we will have 1,000 warrants as well. Okay, so which entitles the holders to buy one. So 1:1, one warrant, one ordinary share, par value of 25 pesos at 30. So yung 30 pesos na yan is the exercise price. Now, the bonds without warrants are sold to yield at 8%. So, ano yung 8%? Naalala niyo sa bonds? Yung 10% nung bonds, that's the stated value. This 8% is your effective rate or your market rate. Now, the market values of each warrant and ordinary share are 5 and 25. Okay, so dahil we do not have the exact value of the warrant on the allocation of this bond, then we will be using the concept of extracting it from the bonds using the present value of the bond without the warrant. Okay, now, so mag-compute muna tayo kung naalala pa natin. So the total issue price is at 109, diba? So that's 1 million times 1.09, which is 1,090,000. Then the market value of bonds without warrant. So sa problem, wala kayong nakitang market value of the bonds without the warrant. Ang meron is with warrants. Okay? Pero, na-mention din that the bonds without warrants are yield to sold at 8%. So gagamitin natin 8% to compute for the present value. Okay? So, for the market value of bonds without warrant, so PB of the face. Kung naalala nyo, PB of the face, that's 1 million times 0.681. Now, paano mo nakuha yung 0.861? So, that would be using the 8% at 5 years. Single payment. So, 1.08 raised to negative 5. Okay? Then, for our present value of the interest naman, so that would be 1 million times the 10% na nominal rate, okay, times the PB factor ng, 3.99 yung nakalagay. So that would be, paano nakuha yung 3.99? That's a present value of an ordinary annuity. So 1 minus 1.08 raised to negative 5 all over 0.08. So pagpasensya nyo na kasi, to be exact here in this problem, I just used various decimal places for the present value factor. But as agreed before, we will be using 4 decimal places if silent yung problem sa ating mga problem solving. Okay? Is that clear? Okay, so pag inad natin yung present value of the face at saka present value of the interest, so we will have the total market value assigned to the bonds without the warrants na 1,080,000. So as you can notice, total issue price is 1,090,000. Market value is 1,080,000. Thus, the allocated value to the warrants is only 10,000. Okay? Is that clear? Now, for the entry, so we debit cash. Issuance pa lang to guys, ha? Debit cash, okay, that 1,090,000, the total issue price. Then, we credit bonds payable at 1 million. Then, dahil yung market value ng bonds without warrants is 1,080,000, so we have a premium, okay, on bonds payable na 80,000. Okay, and then we credit share warrants outstanding na 10,000. Okay, huwag niyong kakalimutan yung discussion natin sa bonds before. Now, sir, paano yan kung market value without the warrants is lower than the 1 million na face value dito? So, kung maalala ninyo, pag lower than face value yung present value, then we will have naman tinatawag natin na discounts on bonds payable. Okay, so this is the entry only for the issuance of the bonds. Now, let's take a look to the entries upon exercise. So, what is the entry? Okay, in scenario 1, if the share warrants are exercised. So, lahat ng 1,000 warrants na yon, which are allowed to be used to purchase 1,000 shares as well, were exercised. So, the entry would be debit cash, 1,000 times 1 times 30 pesos. Then 30 pesos is the exercise price. Okay, so 30,000 pesos yung cash. Then we debit the share warrants outstanding na 10,000. So nanggaling yun sa previous slide na entry. Then we credit the ordinary share capital. The par value is 25 pesos times 1,000 shares. So that would be 25,000. And we credit ordinary share premium at 15,000. So that is the entry for the exercise of the warrants. Okay. Now, what if the warrants were not exercised? So, as mentioned in the theoretical discussion, if the warrants were not exercised, then what we need to do is to just simply transfer it to another paid-in capital account. So, the entry here suggested is debit share warrants outstanding 10,000 and we credit paid-in capital from expired warrant. Okay, naman share premium from expired warrant na 10,000 pesos. Okay, so that's it for the warrants. So just to have a recap about this PowerPoint presentation, so we have discussed share rights. Okay, so this is a right given to the existing shareholders already, okay, as part of their preemptive right to acquire additional shares of stock before it will be given to the public or sold to the public. Okay, and when we talk about naman share warrants, so these are given for those improbable investors o kaya naman the holder of a bond no with warrant or the acquirer of a preference share okay with warrants. And with these warrants now we need to allocate the value okay to both the instrument whether bond man siya or preference share as well as the warrants. So that's it. Okay, so see you on the next presentation.